What's going on? Happy Friday. The great debate, credit unions or big banks? Which do you prefer? Personally, I'll take them both. But today we're going to talk about which one is better for you and how you can incorporate both of them into your funding strategy and give you some of the pros and cons of the big banks versus credit unions. I'm always going to be of the mindset of let's get the money from everybody and let's use all the available resources. You also want to know when this is also important to keep track of when you're putting together a strategy, because you want to be able to really pinpoint who has what and where can you get those particular products from. And we're going to talk about some pros and cons of the big banks, pros and cons of the credit unions, and potentially, one or two easy strategies that you can use to put them together. So here are some of the things to consider when you're thinking about funding from either side. Let's start with the big banks, since most of us are all familiar with the big banks. One thing I like about the big banks is that for the most part, they're convenient. They're all over the place, right? You can damn near find a Chase, Bank of America, Wells Fargo, or Citibank almost anywhere in the country, right? You have a lot of them scattered all over, even your regional banks. If you're in that region, TD Bank, Truist, Key Bank, PNC, right? They're very prominent and they're all over, along with having a lot of ATMs, right? They typically will have a lot more ATMs available. And we'll talk about ATMs with credit unions as well. What's going on, everybody? When you have the chance, just check in. Let me know where you're tapping in from. Great to know where everybody's tapping in from, for sure, for sure. Another benefit of the big banks is going to be their apps. Now, this is a lot of people don't talk about their banking apps, but the banking app for the large banks are pretty damn nice. You can do like 60% of your transactions using the app when we're talking about a big bank. Another thing that I like about the big banks is many of them do their own underwriting. So what this means is that they don't have to go through a third party or anyone else to decide whether or not they're going to give you any money. This could potentially give you some more negotiating room too when you're talking to, once you have a relationship established with, let's say, a banker, and that banker has a relationship with an underwriter, and they can really push to have you get more approvals, right? This is typically because the underwriting is done within their own company. It's not a situation where it's kind of like elusive or even obtuse, where you're not really sure what can be done about it. Now, the big banks, when you talk to business relationship manager, will know how to get in contact with that underwriter, and they will know what would need to be done and how they can help you get that bigger approval, right? A six-figure approval, what have you. One of my bankers at a regional bank, he's like, a lot of times we like to build relationships with banks, whether it's a bank or a credit union. Relationships matter. One of my business bankers and branch manager was able to approve a client for $90,000 the day that they opened up an account. You can do that when the bank does their own underwriting. You don't necessarily have that level of flexibility when the bank has to outsource the underwriting. Okay. So that's a great thing about a lot of the big banks. It also means that you get a quicker turnaround time for the approval because they're doing it in-house with their own team. It also means it's a lot easier to get reconsiderations. When you are applying and doing a spree, you may get a lower than desirable credit limit, right? When you call the reconsideration line, you have a better chance of getting that limit increase when the bank does their own internal underwriting, as opposed when it's outsourced. Okay. And this always is always going to depend on the underwriter as well. That does play a factor. But generally speaking, in-house is easier. You're going to be able to get faster turnaround times, better answers when it comes to reconsiderations and things of that nature. Let's see here. Another reason that I like so those are the reasons why I like big banks. Another reason, if we're talking about cash deposits, some of the bigger banks, their ATMs allow for larger cash deposits. Like Chase allows you to do like $9,000 or something through their ATM. It's a crazy amount. It's one of the largest ones that I'm personally aware of. And their ATM allows you to do almost damn near anything you could do with a teller face to face. Now, some cons about the big banks that you want to keep in mind, and these are some reasons why we like credit unions and smaller banks or regional banks. With the big banks, they're a lot more strict when it comes to their lending. They're going to want to see more documents. They may require higher credit scores because they're looking for the safe bet. Since they're basically owned by other major corporations and other big bankers and investors who are just out to make a profit, those people are less likely to take chances on risky customers, right? So this is important for us as small business owners, because throughout our journey, our credit is going to go up and down and do backflips. All types of random crazy shit happens, right? When you're trying to operate a business. And the big banks, even though they want big business, they really want established businesses. They really cater to businesses that are consistently doing 2 million or more. That's what they really want. Even though they do offer small business products, but they really want the big banks. Another thing is that they typically will have higher interest rates than with small banks. Now, some of the big banks have special customer programs, like Chase has their private client program. Bank of America has their preferred business program or preferred business partner program. What's going on? What's going on from CT? They'll have these type of programs for clients who are really invested into their bank. And one of the great things about these type of relationships in these programs is that these can give you better interest rates. They can lower the interest rates when you take part in these particular programs, right? So I highly recommend everyone to do that when you have the opportunity. The other side is that another pro, though, for the big banks is, even though they're more strict, they generally can give out more money because they have much more liquidity than the smaller banks. For instance, while everyone else is kind of shrinking how much money they want to give you, banks like Chase are expanding and they're coming out with even more opportunities for people, such as $100,000 credit card. And even they have a no doc program now, a no doc business loan that goes up to $250,000. That's because they have a shit ton of money laying around. They have trillions upon trillions of dollars. They are the biggest bank in the country. I think the next biggest bank, I think they're like 3 times larger than the second largest bank, which is Bank of America, I believe. So they have a lot of money to give if you qualify. That's the thing. They want the top tier. They want the creme de la creme, right? And they're a lot fast. Another con is that they're a lot faster to chop your limit. They are quick to cut your limit, like quick to cut a limit. Those big banks, for real. So I would say those are some pros and cons to consider when you're thinking about the big banks. Now, with credit unions, a lot of the things that we dislike about the big banks, we'll love about credit unions. So let's start with the pros. Typically, they have lower interest rates. Okay. Typically, they'll have lower interest rates than a big bank. Another thing is their how they use their hard pulls. How they use their hard pulls is very unique. A lot of credit unions, unlike big banks, a lot of credit unions allow you to reuse one hard pull multiple times over the course of a month. Some some banks, the hard pull is good for 90 days, meaning that they'll pull your credit one time. Let's say if you apply for a credit card or you apply for an auto loan. Once they pull your credit that one time, you can keep going back to them for a credit card, a personal loan, a mortgage, an auto loan, a business credit card, a business loan, all before that one hard inquiry expires. It's very common for credit unions to allow you to do what we call a double dip, which is essentially what I was just saying. You're able to get multiple products with one hard pull. For instance, I have a credit union. I was able to get a credit card, a line of credit, a line of credit, and an auto loan using one hard pull. It was great. And I've discovered that by accident because I had already applied for an auto loan and then I went for a credit card and they were like, oh, there's no other pool for it. I said, really? I said, well, so what else can I get? They were like, well, what else do you want? I was like, oh, that's the type of game we playing? Bet. Let me get this. Let me get this. You know, it's almost, it damn near turned into a little credit shopping spree for real. I ain't gonna hold you. Big banks typically ain't gonna do that. Big banks are gonna want you, they're gonna want to pull your credit every single time you apply for a product. Credit unions win in that category by a landslide. Another thing is that credit unions will, Bernardo, my guy, credit unions, along with having lower interest rates, credit unions generally have lower barriers to entry. They don't expect you to have absolute perfect credit in order for them to rock with you. I know some credit unions that they'll even give you, like with big banks, for instance, if you have a late payment, don't even go to them looking for business funding. One late payment can completely disqualify you. One late payment, even within the past 2 years right now, can disqualify you from funding. Or if they do approve you with that late payment, they'll give you some BS limit like 8 or 9,000. It's something that you can barely do anything with as a business. Whereas on the credit union side, because the credit unions are owned by the actual members, right? Our deposits, our funds, the interest that we pay actually fuel the bank and not just the pockets of, some corporate executive. They are a lot more giving and forgiving when it comes to blemishes on your credit. I actually had a client who was a member of, she's military, so you already know, she was a member of Navy Federal and USAA. Other banks the regular banks were denying her because she had like 2 or 3 recent late payments. They were within the last 30 days of her going on a funding spree. But she called up, I think it was Navy, and Navy approved her for an additional $11,000, even with the late payment on there. Navy, and one of the reasons people like them is because Navy gives very high limits. Now, the flip side, Navy is not one of those banks that allow you to double dip. They are going to hard pull you for every damn thing that you do with them. All right. Everything's a hard pull. Even credit limit increases. If you call in and ask for a credit limit increase over the phone, they will hard pull you for that. So in that way, they're kind of stingy. They suck for that. But on the flip side, I I'm in a group and I saw somebody, he had like a 545 credit score. They still approved him for a $25,000 credit card because he had a relationship built with them specifically. So he had a checking account, he had a savings account, he had a pledge loan, and he data mined with them for about 6 months before he ever applied for anything. So he had the deposits going in, he had the pledge loan going for him. So he built up a very strong internal score with Navy Federal. Navy Federal is one of those credit unions where their internal score can supersede your FICO. And that's common with a lot of other credit unions. They are more lenient if they see that you're one of their primary clients and that you do a lot of business with them. Yep, it's great. They see that you're doing business with them, so they want to do business with you and they want to keep you as a member, because as a member, you are now literally invested into their institution. One of the cons, hold on, let me get some more benefits, right? So we talked about they're more forgiving. With them being more forgiving, that offers more flexibility. And it's getting dark, so I'll be logging off in a little bit. Meaning they're more forgiving, right? Now, some cons of credit unions is that for the most part, they're local. They have, and it's a lot of them are a bit more difficult to join because of the amazing products that they have. You either have to be within a certain geographical region, you maybe have to be, you may have to work a certain type of job, you may have to live in a certain place, work a certain place. Even some of them are faith-based. So if you're not associated with the right religion, you can't get in. So it's a bit harder to get access to them. The other thing that goes into being convenient, since they're smaller, some credit unions, it may be one branch of that credit union in the whole country, maybe two in the whole country. Also, the customer service tends to be a little weaker than the large banks. They tend to be a little less organized. Their technology is typically a little less advanced. So you may or may not have an app. They may need you to fax in or email some of the applications. Some of the applications may not even be online at all. You may have to go in physically or call them to get the application. Their website may not be updated with the newest information. I called a credit union in Missouri and I reached out to them about, a business credit card. And they told me that they don't even do business credit cards anymore. They stopped the program. I said, oh, well, damn. Okay. So then they referred me over to another credit union who does do business credit cards. I will say this, even though they're slower, typically their customer service is a little nicer, right? Not saying the big banks are rude, but they're not going to give you as much attention as a credit union would, unless you're one of their big clients or private clients, something like that, right? Another thing about credit unions is that many of them do not have interest or zero interest credit cards. Many of them do not have that. A lot of the big banks, especially on the business side, they will have zero interest credit cards, and those zero interest credit cards can last anywhere from 6 months all the way up to 2 years of zero interest. A lot of credit unions do not offer that, especially if they do in-house underwriting. Many of the in-house underwritten credit unions do not offer zero interest financing on their credit cards. On the flip side, though, a pro of the credit union is that many of their business credit cards do not come with any additional fees. So they don't have an annual fee, they don't have a balance transfer fee, they don't even have a cash advance fee. So that means if they don't have a cash advance fee, that means you could just liquidate the credit card simply by transferring the money off of that business credit card directly into your business checking account. And you won't get any additional fee. You don't have to pay a higher APR or anything because of that business credit card. That is something that I have only seen with credit unions. I have not seen that with big banks. I don't know any big bank that offers free cash advances and free balance transfers. They typically, even when you're doing 0%, they still are going to charge you somewhere between like 3 to 5% to do a balance transfer. Credit unions definitely win in the world of business credit cards when it comes to their fees. Now, putting that together, something that I would do is, let's say we're looking at, you're looking at, okay, I need to liquidate a business credit card, but I also I want to do it in the cheapest possible way. Something I would do is, with my business, I would establish a relationship with both. I would establish a relationship with a credit union and with, the major banks. I would choose credit unions where their business credit card does not have the fees, right? It doesn't have a cash advance fee, doesn't have a balance transfer fee, and that they're going to give me typically a higher credit limit than if I just went to a big bank. So I would liquidate the business credit card, put that in my bank account, make the investments that I need to make. And then I would do a balance transfer from the credit union credit card to a business credit card, to the major bank, the big bank business credit card that has 0 interest. So that means I liquidated the card for free, and now I'm not even paying interest on the money. I may have only paid 3, maybe 5% just to do the balance transfer. That still beats having to do manufacturer spending, right? It still beats having to pay, 12 or 13% interest on my business credit card. That's how I would actually combine both of those banks at the same time. Another con, something else to consider about credit unions is that depending on the credit union, the smaller the institution, the less products that they have. Appreciate it. The less products that they may offer. So there are a lot of credit unions where they don't really offer anything but a business checking account, a business savings account, and business loans. Whereas a lot of the larger banks, they kind of give you the full gamut. You can do SBA, you can do a loan, you can do a business line of credit, you can do a business credit card, you can get a HELOC, right? You can have almost everything that you're looking for, right? The smaller banks, not so much. But even some big banks, depending on what they are, like Wells Fargo, they've been going through a whole restructuring. So at one point, they got rid of their line of credit, their personal line of credit. Then at another point, they got rid of all of their business credit cards, and they only had a business line of credit. Now they revamped their credit card program, and they just launched a new credit card, right? And that's my neighbor's dog barking, so that happens. And so these are just some different things that you can consider, right, when looking at whether you like credit unions or you prefer a bank. You know, which one do you like? Do you like the big banks or do you prefer credit unions? In a lot of groups that I'm in, there are a lot of people who are saying they only rock with credit cards. They don't do anything else. They don't even worry about the big banks because their personal credit typically isn't strong enough to really get into a big bank. Can y'all hear this dog? He is having a good old time out here, barking, barking at everything right now. What was I about to say? So yeah, they typically just only deal with the credit unions. That's all they want to deal with. Yeah, you going down first? Okay. Oh, GD. This is random. Damn. And so, let me know what you guys thoughts are. Leave a like, leave a comment, right? Let me know how you feel. What's your favorite credit union? What's your favorite bank? Yeah, I know this dog going crazy. So that's gonna be my time right there because I can't compete. I can't compete with the barking dog. So y'all let me know, what do you prefer? Credit unions or banks? It's getting dark out here. The mosquitoes tearing me up. I'm gonna be out, everybody. I see y'all later. Peace.